G'day everyone, and thanks for taking the time to watch this recording. It's a reproduction of a presentation I gave at the AFA GenXt Connect Tour in February 2016. And look, the topic is very much around what advice firms can learn from Silicon Valley. And specifically, it's about how advice firms can leverage some of the methodologies that have been used to start multi-million-dollar startups on apparently a shoestring in Silicon Valley for the last 2 decades. But I want to start off this presentation the same way I did at the GenXt Tour. I want to do it by asking you a question. So in a moment, I'm going to get you to pause this recording. And in doing so, I'm going to ask you to write down the answer to a question, and then I'm going to ask you to come back to me. So the question is this. I want you to imagine that you're at the end of 2016, or if you're watching this in later years, I want to imagine you're at the end of your sort of year, whether that's your financial year or your sort of planning year. And I want you to imagine that over the course of the last 12 months, you've had your best year ever. Whatever that looks like for you, you've nailed it. And in doing so, you've nailed it by solving just one big challenge, one big problem. But in doing so, it was the biggest problem that was holding your business back from more success. And by solving that, you've achieved whatever is important to you, whether it's more time off, whether it's revenue, whether it's profit, whatever it is. You got it? Okay. Pause the video, write it down, and then when you're done thinking about it, come on back. Okay. Awesome. Welcome back. So when I asked this around the country, about 1,400 people came along to the tour. I got a variety of different answers. I sort of wandered around the floor listening to what people were saying, and different people sort of answered different things. Some people were really focused on efficiency. Other people, it was time. They just didn't have enough of it. And in getting more time, that enabled them to do the things that mattered. Some people spoke about they'd been able to find a source of great new clients. Other people spoke about they'd been able to find ways to deliver more value to their clients more easily. And some other common answers I got was around people. Recruiting the right people, retaining them, and motivating them. And the reason for starting at this place is, although this presentation is wrapped in this subject matter of Silicon Valley and high growth businesses and tech startups, in actual fact, it's about one thing. It's about solving problems. And solving problems is really what Silicon Valley does really, really well. They go out and they find problems that haven't been solved yet, and they find ways of doing it in a scalable way. Or alternatively, they go out and look at problems that are being solved, but not well enough, and then they find better ways of doing it. So what I'm going to do over the next 40 minutes, I'm going to pull from a toolbox which I'm going to call High Growth Tech Startup. And I'm going to show you some of the methodologies which sit behind this almost like factory of high growth businesses. And I'm going to show you how you can grab them and apply them in your own business and start to generate much better results than you are currently. Now, I could start off this presentation by kind of waffling on about me. I could talk about my background in business coaching. I could talk about the fact that in about 2013, I as part of a regular thing where I worked outside of my niche, which is financial planners, accountants, and mortgage brokers, I went and got involved in the Sydney tech startup community. I could talk about the fact that it led me to get involved in launching a startup incubator. I could talk about the really smart people that I got the opportunity to learn from, and I could talk about the impact that had on the way that I worked with businesses, the results they got, and ultimately the fact that it led me to write a couple of books. The first one, an ebook called 100 Ways to Run Your Business Better, and the second one, a book called Finnovation, which is something I'm very proud of. But look, I'm not going to do that because, frankly, if you want that kind of information, feel free to go out and check out the website, audere.com.au. Instead, I want to spend as much time as possible over the next 40 minutes sort of giving you stuff that you can apply to your business and making this about you. Because the thing which really kind of started me in the last year on kind of wanting to get up and talk about this stuff was in talking to vice businesses about what was holding them back. And I actually formalized this in 2015. And I started to go out and sort of have a formal research piece and ask businesses similar sort of question that I started by asking you, which is, what are the biggest challenges you're finding that are holding you back from getting the business you want? And the key themes which came up were a lot of businesses talked about challenges in attracting clients into their business. Or attracting the right clients, or attracting the kind of clients who are going to pay the fees that they needed to be profitable, or converting the clients across easily. And they talked about really, it was harder than it needed to be, and especially with the internet and the amount of information, it had made it more difficult than ever for a lot of firms. Many advisors talked about being just overwhelmed. Too much admin, too much paperwork, too much going on. And as a result, they just felt overloaded, overwhelmed, and like they just didn't have any bandwidth to do the stuff that mattered. And many businesses talked about the real challenges in, their businesses feeling kind of manual. Everything being dependent on them. Them not having their systems the way they wanted it. And as a result, not being able to kind of just automate some of these small touch points, the little 1%ers that made all the difference. I think the big fear that a lot of businesses expressed, and some of them didn't, but it was just sat there, was that the business models they had, they just weren't sustainable. So if they were a business with tenure, they were already struggling under the weight of just trying to deliver the things that previously had been easy. And if they were a growing business, they really struggled with the idea of putting their foot down. And if they did, they wouldn't be able to find the people to make it work, or something would go wrong. Common question I find myself asking businesses these days is, if you went to bed and woke up in the morning and your business was twice as large as it is today, what would break first? And most advisors, their response was, the first thing to break would be them, followed by their staff, followed by their clients as they left. So yeah, sustainability was a real sort of underlying fear. What businesses wanted when they talked about it was they wanted to be able to get a real flow of the right kind of clients, and ideally to be able to control that flow. So know that if they went out and did a certain activity, they could almost bank upon a certain number of the right kind of clients coming into their business, and they would have control over it. A lot of businesses spoke about a desire to be efficient, and I've chosen this picture really deliberately, the Rocket Man, because the Rocket Man's about sort of improving the ability of just a normal guy to fly. And in many cases, I don't necessarily think it's possible to automate an advice business, but I think it's possible to supportomate it by sort of automating elements of it which can be automated, and therefore freeing people up to do the stuff that only people can do, such as get in front of clients and build the relationships. But I think a lot of businesses, what they really wanted to do is they wanted to put a smile on their face. They wanted to go out and do the things that created advocacy in their clients, that made a difference, to sort of change people's perception of advice. And in doing so, a lot of businesses wanted to surround themselves with a team around them that felt the same way and really put their heart and soul into doing the same thing. And this is, I guess, my reason for having such passion for Silicon Valley and for talking about it at the GenXt conference, was because this is exactly what Silicon Valley does really well. They leverage business. They create scaled businesses really well. They find really smart ways of attracting people en masse, in many cases with no sales involved. They're able to automate massive portions of their business. In many cases, they don't start off with systems and automation and software, but as they grow, they find ways to replace people with processes and software and technology. And as a result, they're able to sort of chart their path to significant size without putting it under undue stress. And the final piece of the puzzle is, they attract some of the best people. And the things they do are very much focused on creating advocacy in their clients, and they do it really, really well. They're able to spread their word by word of mouth in a much faster way than many advice businesses do. But when I'm talking about this, I don't want you to think that this is all just theory, that I'm just going to chuck a bunch of concepts at you that haven't been proven, because there are advice businesses, and more every day, that are going out and they're applying these techniques and these learnings to really change the way that their businesses operate, and in doing so, kind of remove some of the constraints they have. I want to give you a couple of case studies along the way, but I'm going to kick off with this one. Map My Plan is an online service, if you like, which sort of advertises itself as financial plans for those who don't want to deal with financial advisors. Now, before you kind of think, oh my God, that's terrible, and it's a threat to advice, I want to sort of flip your perception on that, because I don't think it's a threat at all. I think it's a benefit. Fact is, there are a bunch of people in Australia and around the world who just don't want to see an advisor. They don't necessarily understand advice, and the idea of having to sit down with someone, it's just not interesting to them, so they put it off. Something like this means they can come in and sort of engage with the concept and play with it, and potentially do it a while for themselves, but sooner or later there may be a point where they realize that maybe they would like the input of someone who knows it better, or they just want to deal with a hassle, or there's too much complexity, and the next logical step will be for them to engage somebody. So rather than be a threat, I actually think this is a potential lead generator and kind of an avenue into getting more Australians to engage with advice. The tool itself is quite clever. The gentleman behind it is a guy called Paul Feeney, who is a former financial advisor, as well as having had a really interesting and distinguished career in many countries around the world. I encourage you to go check it out. You'll get a better sense for what it does rather than me explaining it to you. But that's my reason for putting it in front of you, is not to talk you through the functionality. It's to talk through a particular element of how it's been rolled out. So when I met with Paul in January 2016, they were about 6 weeks into a launch, and they'd gone out via social media. And the way they sort of launched it and the way they had structured it, as I said, applied a lot of these techniques that we're going to talk through today. And over the course of that 6-week launch program, they generated 7,000 hits to their website. 7,000 potential clients who had actively decided they wanted to take an interest in this idea of getting advice. Now that's more potential clients than most businesses would ever hope to generate, often in their lifetime. And I mean, that's not even the impressive bit, to be honest. And they'd done so. They'd come to the website to take advantage of this offer of doing a test of your financial fitness. And this is a test which is backed by a bunch of research which Paul had done. Now, what the impressive bit is, of those 7,000 people who clicked on and came through, 30% of them took the opportunity to test their financial fitness and get a comparison of themselves against other Australians. 30%. That's an incredible conversion rate for something that we're told, needs to be sold or people aren't generally interested in. And of those 30% who took the test, around 550 of them then made the decision to actually engage with advice and are in the process of creating their own financial advice. Now, obviously with Map My Plan, there are some still things to be worked out, as many startups, around pricing and about getting people to go through the process. But it's a really clear indicator that there are businesses, as I said, out there who are applying these methodologies and they're getting results. And they're moving into a brave new space where they can solve a lot of these problems and get people to engage, more people to engage with advice. So what I'm going to do is I'm going to dive straight in now. I'm going to run you through 3 core concepts and then we're going to get practical. So the first core concept I want to introduce to you is the concept of focus. Now, I don't know whether it's the last 18 months in particular, but I'm seeing more and more advice business owners, accountants, mortgage brokers who they're just trying to do more and more things. And as you'll probably know, the more and more you try and do, the less and less you end up achieving. There's a great book called The One Thing. It's co-written by a guy called Gary Keller. And it puts forward the idea that the route to success isn't about multitasking. It's not about doing simultaneous things. He said, and I kind of agree with it, he says that multitasking, it's a myth. It's actually called multi-switching. And it's a great way to not get enough done. In actual fact, the route to faster success is by focusing on one thing at a time, like a set of dominoes. Knock one over, knock the next over, and by going through the process sequentially, you actually achieve your goal faster. Now, this is one of the key tenets that Silicon Valley follows when it's launching these businesses. The idea of really focus very clearly on one specific element. Try and do one thing really, really well. Go deep and go narrow before you think about going wide. Let me give you another really life case study. Kaboodle Financial Services is a Sydney-based financial services firm. One of the directors is a lady called Peter Diamantida. She is a visionary in our industry. She wrote a great article, I think it might be 2 years ago now, called "The Public Are from Mars. We are from Mars. The Public are from Venus." And some of the concepts in that paper, it was written in the actuarial guide, it's stock full of great ideas. But Kaboodle's really interesting because it is a financial services business that just focuses on one target market. They just service C&D clients. And they do it through combining, some heavy-duty client relationship management software, in this case Infusionsoft, with a great deal of automation, some smart ways of delivering value add to clients, and a little bit of phone-based support. And in doing so, they've kind of entered into a space where they're kind of zigging where everyone else is zagging. Everybody else is going after high net worth. They've decided, no, we're going to go after a completely different marketplace. And they've been very successful at it. In actual fact, so successful that they're now going out to other businesses who potentially can't service their C's and D's and sort of saying, hey, why don't we take over the management of them on your behalf? They've done it because they've been really specific about this C&D thing. In actual fact, if a client pops up above the parapet and sort of needs advice, they actually refer it out because they know very specifically what their business is all about. Equally importantly, they know what it's not about. I guess the other side to this focus thing is about really focusing on who your end client. Now, I'd imagine anybody who's been in the industry for more than 5 minutes will have heard about ideal client, target clientele, niching, or if you're listening from the States, niching. And of all the things I get pushback from businesses when I chat to them, this is probably the biggest one. It kind of goes against the grain for many financial advisors, the idea of kind of getting really specific and trying to focus on one market. But here's the thing. If you try and talk to everybody, what ends up is you end up talking to no one. In actual fact, the best marketing strategies, the best engagement approach is about getting 90% of the market to ignore you, but that 10% who you really want to talk to, suddenly, because you're talking about what problems they have, their ears perk up and they're listening to you. It's not about cutting off all avenues for the future. As I mentioned earlier, a lot of businesses focus on getting off the ground by focusing on a very specific niche. They get their early adopters, and in getting their early adopters, they get momentum that eventually enables them to move outside the niche. I think one of the problems is this ideal client concept is always represented as only one thing, which is you got to be clear about your market. You got to target medical professionals or Gen X or highly ambitious people, whatever it is. It's represented as just focusing on demographic. But I think there's another side to it. I was shown this model probably about 2 years ago, and it really changed my perception of it. And the second side of that equation is you can do it by focusing on a message. What's that philosophy that you want to underpin the way that you manage money? What's that thing that you want to say to clients that you believe in that's going to attract more of them? Classic example here is Aussie Home Loans. When they went to market, their thing was, we're going to save you from the banks. And in doing so, they had such a clear message, they attracted other people who didn't want to work with the banks. And as a result, launched themselves on quite a significant growth path. Of course, the downside there was they then ended up sending to CBA, but that's another thing on the side. Of course, the perfect thing is when you get the sweet spot. You're speaking to a specific market and you've got a clear message. And I think the most obvious example I can think of is Apple, who went after that creative market and with the message that we're about thinking differently and challenging the status quo. And bingo, they got traction in that market. They were able to grow and then expand outwards. So if you're really still resisting this idea of ideal client and focusing, please reconsider. The concept number 2 is I want to introduce you to is this idea of it's not about the idea. Anybody who's read the Steve Jobs autobiography, well, one of my favorite parts in it was when Steve Jobs and Steve Wozniak are sort of invited to come into the Xerox offices. And they're sort of wandering around and they catch sight of this thing called the graphical user interface. We now know it as a mouse. And next thing you know, they've grabbed this idea, they've developed it, and they've launched a new way of interacting with computers via the mouse. Now, anyone who hears this would think this is a story about stealing an idea. I challenge that. I'd say this is actually a story about execution. It's about getting it done. Again, another tenet in Silicon Valley is the idea is only 5%, execution is 95%. And often I speak to advisors and they say, hey, I've got this great idea, but I don't want to share it with anybody, just in case they steal my idea. My response is, go out and share your idea. Tell it to as many people as you can. In fact, go into your competitor's waiting room and try to get them to steal your idea. It's a lot harder than you think, because generally people, frankly, are mostly interested in ideas. Ideas are plentiful. The key thing is, going out and getting it done. There's a second part to this, which is I think a lot of advisors sometimes focus too much on trying to come up with a great idea. And I want to introduce you to a couple of better ways of finding opportunities in your business. When I was involved in the startup incubator, Corporate to Freedom, I got to, as I said, work with a whole bunch of really smart people. And one of the guys who was the speaker on that course was a guy called Peter Davison. Now, Peter, in the late 90s, he borrowed a bunch of money, went over to Silicon Valley and sort of positioned himself as a venture capitalist. He invested in a bunch of startups, one of which was kind of a small little payment system, which was called PayPal. Ended up being quite a success. So as you imagine, when it sold, Peter got quite a name for himself as being a successful investor. And Peter's a fascinating guy to listen to. He's chock full of knowledge. He's a real contrarian. Isn't afraid of calling a spade. But one of the things I found most fascinating about Peter is he has this ability to just kind of find opportunities. He would go away and over a period of days just spend a whole bunch of time researching on the internet. And next thing you know, create this business and sell it for a whole bunch of money later on. And the real thing here is the way that Peter operated. He didn't necessarily go out trying to come up with ideas himself. He went looking for opportunities that were already there. The analogy here I use is kind of like this bear. Bears can't swim. Bears love to eat salmon, but they can't swim. And as far as I know, they can't fish. So they've worked out that if they just stand at a certain point in the river at a certain time of year and they wait and they get good at catching, they can eat all the salmon they want. The reality is, you can go out and start thinking of ideas, but a better way is realize that there are a bunch of unmet needs, of problems that clients want solved that already exist in your business. And a far easier way than trying to go out and find ideas is to go out and find problems. Be the bear and identify what's already going on and take advantage of it. One of the best ways of doing this is just get really curious. I personally think about 70 to 80% of the value of financial advice comes in changing people's behavior. And I think Tony Robbins said, in order to influence someone, you need to first understand what's already influencing them. There's a few different ways you can do this. I mean, just start taking a real interest in the way that your clients behave. Look at the things they're doing or not doing. You could, if you're an emotional kind of person, start to put yourself in your client's shoes. I personally find this really hard to do, but try and imagine how your business looks from the client perspective. What are the things that potentially they're looking for or don't even know they're looking for? Or alternatively, you could kind of go through your old client surveys, your file notes, your pipeline, all your information and data you've got, and try and see if you can see any trends. Let me give you an example of this at work. Money Haven is a startup business really focused on budgeting and cash flow management. It's run by a really smart advisor, James Williamson, who's a long-time client of mine, and he runs the business Millhaven. The genesis of this business was about 2 years ago. James was kind of struggling with the idea that many of his recommendations were based on cash flow information, which frankly, he wasn't sure that clients either understood properly or were taking the time to get the information, or in many cases, he actually believed they were maybe lying to themselves about what was going on. And he decided that in order to provide really great recommendations, he needed to go out and get that kind of data. But recognize that cash flow management, it wasn't just about the numbers. In actual fact, he came to the conclusion that there are 3 levels to cash flow management. The first one was giving the data, giving clients the information. But I think we all know that giving people information, giving people data, that's not the answer. I had a great quote the other day, which is, if information was the solution, we'd all be billionaires with great apps. The reality is there's loads of information. So that's not really the value piece. The second level, he said, was interpretation, the ability to look at the data and tell clients what it means. Again, this is better, but again, this doesn't really change behavior in any consistent way. Instead, James came to the conclusion that the real upper level to this was in trying to influence people's behavior, to try and change the way they acted by making it really, really easy. So as you can see on screen, the proposition on Money Haven isn't just about data or interpretation, it's about removing the complexity, not having features and bells and whistles, but make it easy and something that could happen in a simple way so people can change the way they behave and change the way they save. Another great example of this is Acorns, which as of January 2016 has recently launched, which aims to kind of automate savings. So it monitors your spending via your card, and if you spend $3.60 on a coffee, it will round it up to the nearest dollar and then invest 40 cents into a fund for you. Again, automation is one of the easiest ways of changing behavior because it's behavioral change without people thinking about it. Let me introduce you to concept 3, which is around avoiding perfection. Now, I have a bit of confession to make. I am a recovering perfectionist. I am getting over it. And the reason I'm getting over it is because perfectionism is a monumental waste of time. The reality is the amount of man hours that are just wasted in trying to get things just perfect. When the reality is, again, another great tenet of Silicon Valley is learning only begins once you launch. It's not until you get whatever you're doing, your new offer, your new business, your new process out there in the real world and start having clients use it and you're using it, that you're actually going to start to get the feedback that matters. It's this whole concept of build, measure, learn. And the problem is perfectionism means that you're sat in there developing something which in theory may work, but in reality you don't know anything about. The only solution to that is get it out there as quickly as possible so you can start that learning process. I think most people will know about the 80-20 rule. This is Pareto. He was an Italian scientist who sort of through a series of studies discovered, that 20% of landowners generally own 80% of the land. And it's been applied across a whole bunch of stuff. 20% of your clients probably generate about 80% of your value. Well, I think that's a really good sort of benchmark. Get it 80% done. Whatever you're working on, get it to 80%, and then get it out there and start that process of learning how people are going to use it. Because the bottom line is, whatever you think your business or your offer is going to look like in its final form, there's a good chance the real outcome is going to be nothing as you think it is. And the sooner you can get it out there, the quicker you can learn what that final form is going to be. In other words, we're looking to fail as quickly, as cheaply, and as fast as possible. Because through the many, many failures, you're going to discover what your successful offer or business is going to look like. This is a concept I really love, and it's a mistake that a lot of businesses do. They kind of go for this place on the right, which is refinement. They decide, right, I'm going to build this kind of model or this kind of offer. And they then try and refine it and whittle it down, make it more efficient. But the problem is, because they've just gone with one thing in mind, many cases they might be missing the best solution and kind of closing their eyes and putting the blinkers on. A far better approach, and the approach that Silicon Valley does really, really well through something called A/B testing, is to kind of go, well, hold on a moment, before we decide on a solution, let's ask a few what ifs. What if we did it this way and that way and that way? And they'll put it out and test it. And then they'll work out which one is best, and they'll test it again. And by doing that, they kind of arrive at a number of different solutions and then explore the ones that worked until they finally get to a point where they can begin to refine out. So the big concept here is, always in your advice business, if you're doing something different, start by exploring before you're refining, and you find a better chance of finding that route to success. And this is one of the key ways that Silicon Valley is able to achieve these massive growth rates. Let me give you a really practical example. I've recently been doing a bit of work with a number of businesses on client reviews. And client reviews are one of those things where, if they're done really, really well, can add massive value to clients. But if they're done poorly, can be a real wasted opportunity. Now, when it comes to reviews, and not getting clients to engage, or not getting them in, or not being able to make them valuable experiences, many businesses approach this as a data problem. You know, if only I could get data from the clients, if only I could get a good reverse fact find, if only I could, create a good report, then the review would be great. But what if that's not the problem? What if it's something else? What if it's like, clients don't see value in a review, or they don't understand what it is, or they see it as too much hassle, or they're not emotionally invested? What if it's something like that? Well, these are all hypotheses that you could test. You could create little variations, little experiments to run. So you could create a speed review, a review in 30 minutes, and offer it out to your busier clients, see how they like that. You could pre-video record some of the review and send it out as pre-reading. You could create an assessment form so that clients pre-assess where they think they are, and then they come in and compare it to where they think that you think they are to get them to emotionally invest in it. You could even offer a discount, where if clients come in and engage with a review, they get a discount on their ongoing fee, and see if sort of the financial aspects is a lever. Personally, I'm taking a real interest in the way that online businesses get people to turn up for webinars. And it's not just about sending out an email and going, hey, here's your invite, and then expecting people to turn up. They've recognized that there is a certain sequence of information that they need to provide to clients in order to kind of build their motivation, build their desire to come along. And I'm working at the moment with a number of businesses to say, well, what does that sequence look like for an advice business? When should we start communicating ahead of a review? Should it be 6 weeks, 4 weeks, 2 weeks? What combination of case studies and what's in it for them, and getting them to answer small questions along the way to get their buy-in? What kind of combination of that kind of information results in clients turning up for the review motivated and ready to go? It's a phenomenal opportunity and an area, because if you can get this right, potentially as an advice business, you can automate it. And if you can automate it, you can suddenly get to a point where you can focus on the really important bit of actually delivering a great experience when you get in front of them. I think the big idea here is to be guided. I love this picture because it speaks to the heart of why it's important to kind of get it out there and learn. Whatever you designed, however good it seems on paper, it's not until you get it out in the real world and people start using it, then you're going to discover what it is. And the sooner and the faster you can learn from that user experience, the more chance you have of creating the right solution, and a solution that people are going to engage with, which ultimately is what's going to drive your business. Okay, I want you to take a moment. I've been talking for a bit, and I want you to just reflect. Of all the things I've spoken about so far, what's that one thing that you heard it kind of a light bulb went on, or a smile hit your face, or it sort of talked to a problem that you had? Just write it down now. Excellent. Good. Keep a track of it. Keep it with you, and let's crack on. So I've talked a lot so far about the concepts, and now I really want to dive deep, and I want to talk about the application. And in doing so, I want to talk about the 3 core issues that are impacting advisors' business models. There are 3 things that I think, and my experience has told, that that are stopping businesses from leveraging, from doing more with less and really growing at a rate that doesn't put them under stress. The first is the way they sell their advice. In many cases, for most businesses, it's primarily one-to-one selling. In many cases, it's not aligned to the way that clients like to buy, and especially in a world where information is readily available. And the final piece in the puzzle is, frankly, in many cases, the words. The way that it's represented is jargon-filled, it's entirely conversational, and it doesn't necessarily talk to the way that people want to consume information. And as a result, many businesses are having to invest a lot of time bringing clients in and converting them, rather than just sitting in front of clients who get what they want, get advice, get what the business does, and are ready to engage. The second area is delivery. As I said earlier, a lot of businesses are people dependent. You take the people out or you remove the people and suddenly the whole business kind of is affected. In many cases, they just don't have the systems and processes. It's manual. And finally, the stuff they're doing in many cases just isn't valuable. They're missing out on doing those 1%ers, the things that really matter and collectively will add up to turning clients from kind of meh to complete advocates. And the final piece in the puzzle is team. In many cases, advice businesses are stuck with they're challenged to get the right people in. When they're in, they're challenged to keep them. They're either walking out the door pretty quickly or it suddenly becomes about the money. And frankly, in many cases, there's too many people on board who have got an employee mindset rather than an entrepreneurial mindset. In other words, they've got people who are just there to kind of pick up a wage and then deliver value, which rather than the entrepreneurial spirit, which is create value and you'll get it back. And I think the latter, man, if you can spark that in your team, you can get to a point where they end up doing a lot of the heavy lifting and they help you to build a business, as opposed to what many business owners do, which kind of feel like they're fighting against it all alone. So I want to give you some practical things where if you leave this webinar, you can have a crack at them. So I'm going to start with sales. And in doing so, I'm going to draw from a book called 100 Ways to Run Your Business Better. Let me just go back. 100 Ways to Run Your Business Better, which was a book I wrote sort of in early 2015. The story behind this book was I was working with a client, and again, I was suggesting a lot of these little tweaks. And he turned around to me and says, "Sure, this is awesome. How many of these little ideas do you have?" So I took the challenge, went home that night, grabbed a spreadsheet and just wrote. And at the end of that sort of 40 minutes, I had 142 different ideas. And the kind of criteria was these had to be low-cost ideas, big impact, and they had to take no more than 48 hours to 1 week to implement. So I whittled it down to about 100, published it via an ebook called 100 Ways to Run Your Business Better. And it's something which, if you're interested, you can actually download off our website, www.audere.com.au. If you go to the Our Work section, it should be sat there. So I'm going to pull a few of these concepts to show you that, the practical application. Let's talk about sales. If you have listened to what I said and you said, one of the problems in my business is the way that I'm selling, I want to give you a few tips. Number 25 of the 100 Ways was around researching a new niche. One of the things is the easiest way to attract people into your business, if you've got this challenge, is just try and find out what they want. I want to tell you the story about this. There's this guru in the US called Dean Jackson. He's a real estate guru, and he has this theory called cheese and whiskers. And the theory goes behind that he suggests that people are a bit like mice. And there's good validity for this. Mice are used all the time in laboratory experiments, specifically because of the way they make decisions is actually pretty similar to human beings. And Dean says that mice are interested in two things. The first thing is they're interested in cheese. And if we put it across to humans, cheese is good stuff. It's benefit, it's wealth, it's happiness, all of these good things in life. And the second thing that mice are interested in is avoiding cats. And in the human condition, cats are risk, hassle, bad things that could happen. Now here's the thing. Many advisors don't realize, but in the eyes of your prospects, i.e. mice, you're a cat. You represent the risk that they're going to be persuaded to spend money, or hassle that they have to sit down and have the conversation in the first place. And in many cases, the challenging part of being faced with the truth rather than just living in blissful ignorance. So when many advisors go out and they start talking to clients about, come and meet with me, have a first appointment, in actual fact what they're offering is a meeting with a cat. And it's no wonder that, so few people want to take advisors up on that complimentary first appointment. Instead, a better way of going out and attracting lots of new clients is to go out and kind of offer free cheese. And cheese for clients is that thing they want. The only way you can get close to that is by spending some time going out there and researching, talking to whoever you want to work with and finding out, what are you looking for? What financial services topics are you following? Whose content are you reading? What's that one thing which, if I could give it to you, would make a big difference? If you know what that is, then you can go out and market your business in such a way that, again, you make that decision process, that ability to engage with what you do much, much easier. So go out, conduct a research interview, find out more. There's a second reason for doing this. I worked with a client recently where we went through this process. And after he'd done about 6 interviews, we worked on the questions, we developed them, off he went, 15-minute phone interviews. And after 6 interviews, he came back and said, hey, in 6 interviews, he'd generated 5 referrals and 1 referral to a new center of influence. So not only is this a great way of sort of learning this marketing gold, it's also a brilliant way of potentially generating referrals for a whole bunch of reasons, which I'm happy to explain to you another time. Number 38 in the 100 ways was to run a seminar that solves a problem for your clients. And whether you're doing seminars, webinars, whether you're offering downloadable content, one of the biggest challenges, as we kind of touched on, is don't go out there and talk about what you want to do, what you want to talk about. Talk about the things that are going to solve significant problems for clients. Let me give you a case study. Again, another client I was working with had been running seminars for some time. And they'd run seminars on sort of self-managed super funds and various other sort of financial concepts. And they'd had kind of mixed success. So we decided to take a different angle. And we started by asking, well, who do you want to target? This is the whole research and new niche thing. And we discovered that the target market they want to go through was IT consultants. And we asked a big question, what's the biggest problem they had? And that particular time, the biggest problem this target market had was they were concerned about cutbacks and redundancy. So we started doing a phone around just to confirm this with clients. And sure enough, we ended up speaking to one of their clients who happened to be a speaker, who gave talks to this particular target market on how to make yourself indispensable at work and increase your hourly rate. So we asked her to come and speak, and sure enough, the event was not only sold out, but it generated a significant number of leads. The lesson here is, don't go out there and talk about what you need. Don't try and get clients to come and talk to what you've got to say. Go out and focus on what they want, because when you give people what they want, you earn the right to talk about what they need. The final thing here is number 67, map out your client engagement strategy. I think the clearest example of this is, what are you doing for your clients in those first 90 days? Those first 90 days after your client signs on the dotted line are all important, because those first 90 days will either be the trigger for your clients kind of entering that period of buyer's remorse, where they start to think, did I make the right decision? Have I spent money the right way? Should I sort of go back and try and get a refund? Or, alternatively, if you get a series of touch points where you're kind of delighting them, you're informing them, you're starting to kind of get them to do small tasks to learn how to engage with your business, you can flip them into the other way of thinking, which is around, you flip them into that way of kind of congratulating themselves on making a great decision. Endorsement. I think we've all had it where we, have a perfectly good phone, which is fine, we don't need a new phone, but then suddenly we have the opportunity to get this new phone, and then suddenly this new phone that we've got is the best ever. Same thing with a car. Your previous car you drove might be the best ever. You don't need a new one. As soon as you buy a new one, guess what the new best thing is? It's very easy to trigger this in human beings, that advocacy, and not only will it lead to them feeling good about the decision, it leads to them recommending other people and talking about it. The first 90 days is key, and if you can map it out on a big sheet of paper, draw it out analog before you go digital. If you can map it out, then you can automate it. Okay, let's talk about delivery now. And number 64 in the 100 ways to run your business was all about automated email chains. There's a host of different things you can do now with really great CRMs to kind of automate the communication with clients. And I'm not talking about spamming communication. I'm talking about value add videos, checklists, or emails, which really give clients information that is useful. Now, there's a whole bunch of events that happen in your advice business that you can set up for these to go out. You could, like the review example, you could set up some emails to kind of get people's excitement and increase their engagement prior to review. You might have other touch points, such as coming up to the end of financial year or before or after Christmas. Alternatively, you might want to go sort of more advanced on this stuff. And you could look at some of the ways that CRMs now, you can set them up so if a client tends to hit a certain page of yours, say a page on your website all about cash flow management, 3 times in a week, you can automate an email going out to those clients to say, hey, just want to let you know about this offer we have around cash flow. And as a result, you can hit them in exactly the right point with the information they need and create value. Again, really exciting area that I think only a few businesses are actually looking at. Number 69 in 100 ways to run your business better is around getting comfortable using Skype. And frankly, whether it's Skype or Zoom or Google Hangouts or whatever tool, I think the opportunity here is to recognize that whilst previously, it was really important to get face-to-face with clients, the availability of online video conferencing and meeting software and the reliability of it means that in many cases, there are some clients who may even prefer to come and meet with you online than face-to-face. To give you an example, I actually just the other day met with an advisor who about 2 years ago, came to me and said he was moving to London. So the conversation went a bit like this. Dean Holmes came to me and said, Stu, I'm thinking of moving to London. And I said, okay, so you're going to sell your business, Dean? He said, no, I'm going to run my business from London. And over the last 2 years, he's done so very, very successfully. In fact, he's done so to the point where rather than it degrade the relationship with his clients, it's actually made it better. He comes back to Australia every 3 months, spends about 4 weeks here. But other than that, all his engagement is online. And it's actually improved his level of engagement. The era or the age of the digital nomad advisor is no longer just a sort of idea. It's actually happening, and more advisors are using it. Number 77 is kind of a big, hairy opportunity, which is this idea of don't give clients reasons to procrastinate. My personal belief is procrastination is one of the biggest killer of values. I often talk to businesses about their value proposition, and many advisors are very focused on sort of demonstrating the impact of the advice on a client situation into the future. But I think probably an even more powerful way of demonstrating value is to ask the question, imagine where you'd be right now if we started working together 5 years ago. I think the true value of what you do lies in making clients take action earlier. And I think if you're looking for a problem to sort of point these concepts at and really have a crack at solving, this is a big one, and one that if you can nail it, you can create massive, demonstrable value for clients. Two final ones under the delivery banner that I wanted to introduce you to are sort of number 43 and number 44. Number 43 is about creating online e-courses, and number 44 is about creating a community. I think I'm seeing more and more advisors who are now looking to kind of take their knowledge and experience and package it into products that they can sell, products which aren't just about one-to-one, that are scalable because they are online or because they're delivered one-to-many. I think this is a golden opportunity for advice firms, and something that if you are interested in creating additional revenue streams that aren't just dependent on your time, I'd be looking seriously at that. That book, Tribes by Seth Godin, is a good place to start if you're interested in this stuff. The final piece of the puzzle is team. And there's a lot of businesses out there for who this idea of recruiting, retaining, and kind of getting the best out of people is really a major thing. So I'm going to introduce you to a couple of concepts. Number 83 and 84 in the 100 Ways were around developing an online operations manual and adopting the system for designing systems. Anyone who's ever developed process manuals will know that they're a really important thing for businesses to have a resource that people can go to and find out how things happen or how things are supposed to work. But they're a pain in the neck to write. There is nothing more painful than having to write out how things are done. It takes ages. Thing is, you don't have to these days. Intranet sites, personal intranets or small business intranets are cheaper than ever. Whether you go totally free with something like Google Sites or go with something that's small but paid, like Mango Apps, you can leverage the power of online in terms of not only just having your documents and your tools available there, but also using video. Go to YouTube, and here's a little challenge for you. Go and download a page on how to tie a bow tie, and go and get a video on YouTube for the same thing, and see which you find easier to follow. Bottom line is you can be creating instructional videos for your staff on how to do things simply by using screen grab video like Jing or Screenomatic, and literally record an instructional video as you do it. The second piece in this is, though, as a business owner, let's face it, you probably shouldn't be writing the systems. So if you can create a recipe in your business that people can follow, so every time they come to write a process, they know how to do it and they know how to structure it, then you can get to a place where other people in your business are writing the process as you go. Almost like someone comes to you and says, hey, I looked on our intranet and I couldn't find a process for this. Your common response should be, hey, great, you know that process called the system for designing systems? That'll show you how to create a system. Instant way to get a business, a self-evolving business, if you like. The final two pieces I want to talk about are number 93, which is about embracing outsourcing, and number 87, which is around using freelancers. One of the reasons why I think right here and now there is such a massive opportunity for advice businesses to own the future of advice is because the resources that are available to you as a small business now just weren't there 15 years ago. If you wanted to get a website built or a marketing strategy put in place or outsource things overseas, or any manner of specialist skills and talents 15 years ago, and if you want a corporate, it just wasn't happening. But now those skills are available, and they're cheap, and they're accessible, and they're commonplace. When you add into the mix the fact that as a small business, you can come up with an idea on Monday and have a basic version implemented by Friday, compared to a large corporate who can take 6 months to get through sign-off and legal. It makes you agile, which means you can play in doing things faster and more innovative than any large business. Now is such a great opportunity, and if you're not doing this, whether it's just to stop doing things that you're not good at, or to start doing accessing skills that you don't have, please go out there and access the freelance economy, because it's there and it's a golden opportunity. Cool. So far we've talked about principles, and I've kind of covered off on some practical things. And I want to leave you with some things that are even more now, that you could kind of leave here and start right away to change the way you think and to change that path into innovation. The first one is go out and partner up. I've had the opportunity to speak to a lot of kind of angel investors, venture capitalists, people who take an interest in startups. And it's interesting, you speak to each of the different people, and they've got different kind of criteria that they look for in new ventures. Some look for people under a certain age. Some look for people who have a certain kind of mindset. Some will only, will refuse to engage with businesses where there are familial ties. There's a common view in Silicon Valley, there is a common view that you stay away from lone founders. People who are the only one trying to launch their business or launch their offer. There's a belief that it's generally because they haven't been able to persuade anybody else to kind of join them. And if they can't persuade anyone else to partner with them, then they're unlikely to be able to persuade clients to come on board. And I think there's a big case for for challenging that and saying, well, when you're an established business owner, there's a different set of rules. You've got different resources, but nonetheless, frankly, going out and connecting with other people who share your passion for solving a certain problem and have complementary skill sets is nonetheless a really great way of kind of giving your idea momentum. So if you're not doing it already, go out and chat to people, connect with others whose businesses are facing similar problems. Go to meetups. Go and join meetup.com and find people either within your industry or outside. Go to your local industry thing and just connect. Because having multiple people together is kind of a faster route to getting things done. And the final bit is kind of look outside our industry as well. Some of my biggest learning experiences have been when I chose deliberately to work with businesses outside my niche. Most memorably, obviously, the startup thing, but also I had a phenomenal experience in working with a fitness group in 2012. And in doing so, I learned things that our industry hasn't yet got their head around. In fact, if you're looking for inspiration, the fitness industry is a great place to start. Some of the problems that they grappled with, particularly around scale, there's nothing less scalable than being a personal trainer and having to work 6 a.m. till 9 a.m. and then have a massive break in the day and then work 5 p.m. till 9 p.m. You're literally trading time for money. But the way that some really smart people have solved that through group training and CrossFit, and now moving into the online world, I think is a great opportunity for advisors to kind of learn from that and really learn from the way that fitness industry has really changed people's behavior and come from being something that only rich people had to something that's widespread. But frankly, other industries out there are doing things better than we are, and we can take things from them, port them across, and learn a lot. Okay, that's pretty much what I'm going to cover in this session. Let me give you a quick summary. I started off talking about focus, this idea that going deep and narrow rather than trying to speak to everybody is a really great way of launching. And this doesn't have to be a sort of irreversible focus. In actual fact, for many, many businesses, it's about getting traction in one market, getting those early adopters before you expand out. Second lesson was all about it's not about the idea. The idea is only about 5%. Execution is 95%. And in many cases, it's not finding an idea that will provide the greatest opportunity. Sometimes it's just looking for pre-existing trends, problems, unmet needs, or alternatively, just getting really curious about the way that your clients are behaving and trying to understand what's influencing them. Lesson 3 was around avoiding perfection. It is such a massive waste of time. And frankly, it's not until you get whatever you're thinking about out there in the real world that you're going to start learning from it. And when you learn from it, frankly, the final version of whatever you're trying to launch is going to look vastly different from whatever you thought it was. So go out there and explore many options before you choose to refine. And finally, if you're looking for 3 core issues to point your intellect and your problem-solving capability at it, for me, these are the big ones. If you can address that the way that advice businesses sell what they do, if you can look at improving the way that they deliver value to clients, and ultimately the way that they attract, retain, and motivate people, these are things which will stand between advice businesses having a model that scales and one that kind of is stagnant. Okay, feel free at this point to do one or two things. Just write down on a piece of paper, that same piece of paper you've been using, what's the one thing that you're going to do off the back of listening to this? There's really no point sharing all this information if it's not going to turn into action. So write down one action, and alternatively, if you want to engage, feel free to drop me an email at info@audere, audere.com.au, and share with me your next step, and I'll keep you accountable for making it happen, and may even give you suggestions as to how to do it faster, quicker, or maybe connect with other people who can make it happen. Final piece in the puzzle. If you are interested in Finovation and you weren't lucky enough to come along to the AFA GenXt, you can still pick up a copy of it. Unfortunately, it's not available for free by visiting the stand, but you can visit the website www.finovation.com.au and buy a copy there. If you'd like to get a copy of 100 Ways to Run Your Business Better, feel free to SMS 100 Ways with no space to that number, 0428 479 700, and if that SMS is still active at this point in time, you will receive a text back asking for your email address, and bang, a copy of that book will be sent to you. Just to let you know, this isn't one of those $5 a minute things. You're not going to be charged for this beyond what you already paid for a self-managed super fund SMS. And finally, look, if you've really liked the content, if you would like to sort of connect further and have a bit of a chat, feel free to go on the website. I think there's a link on there which enables you to book a one-on-one chat. I'm happy to share with you further information, and alternatively, have a chat a bit about your business with no obligation and identify some strategies that might help you move the business forward, or put some of this stuff in place. Thanks very much for taking time to watch it. I hope you've enjoyed it, and hope to connect with you soon. Bye.